Hello, everybody. Most of you are overpaying when it comes to tax. And I think seeing a trend, especially when you look at income tax returns for individuals, even for companies for that matter. So I want to tell you some tips and tricks, things to think about. How can you pay less tax this year? What must you do to pay less tax this year? Number one of the things that's so underrated and people don't even know about is what is called retirement annuities. Now, your contributions to a retirement annuities are immediately deductible. Whatever you contribute to a retirement annuity is immediately deductible. Now, think about this. Instead of investing in some instruments which maybe might accrue interest or dividends, and then you will get taxed on that dividend or that interest for that matter, think about retirement annuities, especially business owners, people who are not already contributing to pension funds and provident funds. Remember, if you're a business owner, you are the one who's looking after your own retirement investments and so on and so on. Immediately by contributing into a retirement annuity, you get a tax benefit. The only thing to think about with retirement annuities is I think it's limited to about 27% of your taxable income, and your contribution can only be up to about 300,000 or 350,000. But retirement annuities, many people are sleeping on the retirement annuities, and I think it's so important. It's so crucial. Many people don't know about the retirement annuities. Look up retirement annuities. Your contribution to a qualifying and a correct retirement annuity gets you a tax deduction. So if you start contributing this tax year, your contributions will be accounted for in your tax calculation. So in other words, you will get a benefit. You get to deduct whatever you contribute, you get to deduct. Like I said, limited to those provisions. Number two is medical aid. Now, if you belong to medical aid, automatically you will get what is called medical aid tax credits, depending on who's a dependent, who is a member of the medical aid, etc., etc. Now, one thing that people are sleeping on when it comes to medical aid is the out-of-pocket expenses. Think about instances where you've gone to see a doctor and those expenses were not covered by your medical aid. If you've got a child with a disability, or if you've got a person in that medical aid with a disability, and you have to go see specialists and you have to go see doctors, you have to buy devices and many things. Some of these things are not covered by the medical aid. So out-of-pocket medical costs, keep your receipts. Make sure that you have a track record of your doctors and everything. If your child has a disability, you can deduct those things. So in other words, those costs that your medical aid is not covering, you can then bring them into your tax calculation, and they decrease your tax liabilities, your tax liability. Many people don't know about this, and they think that just because the medical aid didn't cover, there's nowhere else they can get relief on this. Remember, you can get a deduction for some of your out-of-pocket medical costs, especially those with people within their medical aid with disabilities. I've seen a lot of people who don't know about the benefits that come with people with disabilities and special conditions, especially. This is a very crucial thing to think about and to take advantage of. If you are not taking advantage of this, you're overpaying your taxes. You're overpaying your taxes. So I know many people, if you are in a medical aid, chances are 99% of the time you have been rejected of a claim. Think about it. It's one of the things that you can think about. Now, out-of-pocket medical expenses, we've covered that. Another key one that I see all the time where people lose out and they're just bleeding tax, they're just overpaying tax, is when you get a travel allowance from your employer. Guys, if you get a travel allowance from your employer, I don't care what the structure is or whatever it is, the moment you get a travel allowance from your employer, you need to keep a logbook. The moment you don't have a logbook, I can tell you now, you are bleeding tax, because all the logbook does is to prove that you are actually using that travel allowance. There's a business element and there's a private element within your travels. And the fact that your employer gives you a travel allowance, it means that there's an understanding that your job, your role requires you to be traveling up and down. Now, guys, keep a logbook. We're in 2026 now, so make sure that it's not as difficult as it used to be in the 90s, where you have to manually write down your trips and say X number of kilometers. Now you can call your tracker and ask them to install a tracker in your car. And at the end of the tax year, you just request a report for all your trips. And that will be sufficient evidence for SARS. Then we can submit that to SARS, and immediately by doing that, by keeping a logbook, you are going to save on all the tax that you've been overpaying during the tax year. Simple things. Now, if you don't do that, and now you're going to be stranded and you're going to end up overpaying. The moment you have a travel allowance, guys, remember what I'm saying. The moment you have a travel allowance, make sure that you have a travel log book. You will save a lot in terms of taxes. Now, another thing, since COVID, many companies are allowing people to work from home. Even people who are running businesses, some of them are running their businesses from home. They've put an office space there, etc. Home office deductions. This one is a bit of a new one that came up, and it's been popularized now in the recent periods because of many people having to work from home. Now, guys, if you have dedicated a space in your house where you are working and you're generating for your job or for generating income purposes, you can apportion some of the expenses. You can apportion the electricity cost, your home loan costs, interest that on the home loan. Your rent, you can apportion your rent to that space. Anything that is proportionate to what you are using, because you're using electricity when you're at home, you are internet, you are using it, you can claim some of those expenses. So these are some of the areas where people are not really clued up, they don't know about, and as a result, they are losing out on these deductions, and it ends up creating a big tax liability for them. All right. These are some of the things for individuals especially that I can think of, but there's businesses as well. I've seen businesses leave a lot of tax, pay a lot of tax through not knowing and not understanding. There's something called Section 12C. This one is specifically applicable to those companies that are in manufacturing. Imagine a situation where you buy a plant or a machinery, you spend 2-3 million rand. From an accounting point of view, the accountants will tell you that this has to be depreciated over 3 years, over 4 years, 5 years, whatever. But for tax purposes, Section 12C, you can actually write off and get a deduction for about 40% in the first year of buying that asset, and immediately save on the income taxes for your business. Now think about that for a minute. What can that 40% of the 2 million, 3 million do for your bottom line? It's instant cash flow for you. You don't have to pay tax and overpay the taxes on that. Section 12C, I think it's capital C. That's the wear and tear allowances on specialized manufacturing equipment and all of those things. These are for businesses though. Another thing that really I think people are paying, they're overpaying tax on, is because of provisional tax. Provisional tax is problematic for many people, even businesses for this one, because the moment you don't follow the rules of provisional tax, I can guarantee you 99.9% you are overpaying your taxes. The moment you ignore the rules of provisional tax, the rules of provisional tax are simple. It says every 6 months, create an estimate, pay me in terms of, this is what SARS says, pay me a certain portion of the tax that is going to be due at year end, and then at the end of the year, make another estimate and top up your taxes before you close your books. Now, many people ignore all of this and they just do financials for the whole year. And after the end of the year, they then want to pay the tax that is due. You are going to suffer penalties. You are going to suffer underestimation provisional penalties. You are going to suffer underpayment provisional penalties. Provisional tax is very, very important for your business. For a business, it's mandatory, so always think about it. But if you are an individual and you are a provisional taxpayer, I can guarantee you are also losing money when it comes to provisional taxes. Now, there's another cool one that I love so much, another cool provision or trick that applies to businesses, small businesses. So according to SARS, guys, there are different tax tables for small business corporations. I don't know if you knew this. If you are running what is called a small business corporation, and there's a criteria for it, it's a whole list of criteria where we check for you and see that, do you qualify as a small business corporation? Do you know that if you qualify as a small business corporation, 95,000, the first 95,000 of your profit, you pay 0 tax. You don't automatically just pay the 27%. You see the big companies that don't qualify for small business corporation, automatically those guys must pay 27%. That is the tax rate for the land right now. We don't know what's going to happen. I'm recording this in January of 2026. So the budget speech is coming now. We don't know if there will be a change in the corporate income tax rate, but small business corporation right now, the first 95,000 rand, guys, you are going to pay 0 tax. Did you even know about this? Or you were just paying the 27% automatically by default? No, think about the small business corporation. I think it's section 12 capital E, if I'm not mistaken. Small business corporation. The first 95,000, you don't have to pay tax. So For some of you guys, you are just running away from SARS, whereas you are already having these benefits that you're not taking advantage of. Think about these things that I'm talking about, whether you're an individual, whether you're a corporate or in business. Now, guys, let me leave it there. Share with me in the comments, what are some of the tips and tricks? What are some of the things that you feel like, nah, man, I'm overpaying on the taxes. I'm overpaying on the tax. And on the things that I spoke about today, which are the things that you knew about and which are the things that you did not know about? Right, I'll see you in the next video.